morning to our RANsquawk listeners. Hope you all had a great evening. A recap then of the major events we've seen so far this morning. A lot of apprehension still for many investors as we await any final decision regarding the debt swap talks ongoing for Greece. Nothing particularly new seen as yet, but a lot of the speculation here in the UK would suggest that the IMF, along with other senior partners within these negotiations, are pushing the ECB to take a hit potentially on their Greek bond holdings. This, however, seems to be somewhat against the current stance of the ECB and is yet to be seen whether that will change that or not. As such, the euro has softened pretty much across the board, and equity markets are at the moment trading around intraday lows. We have seen a bit of underperformance in the periphery, particularly that of Spain. A lot of focus today on Portugal, having seen another day of their spreads blowing out on the 10-year part of the curve. We have heard out of one member of Portuguese on the Cabinet Secretary saying that they do potentially need further assistance from the EU and IMF for financial aid. This somewhat refuting the PM's comments we saw yesterday. As such then, the Bund has continued to rise. That's also been underpinned by strength in strong 2.1 cover ratio in an auction of 30-year debt from the Bundesbank. Last time this particular line was tapped back in October, it was technically uncovered, so somewhat a relief for that appetite for German debt. Taking a look at other things we've seen, we saw the Q4 advanced estimate of UK GDP. It came in at minus 0.2% on the quarter-on-quarter reading, 0.1 lower than expected. However, we've seen the sterling currency actually strengthen on the back of that, having weakened into release at the initial open of the UK markets. In terms of the Bank of England minutes, the January meeting was 9-0 unanimous on keeping the interest rate on hold at 0.5% and the APF at 275. However, it does look likely, given some of the recent comments as well from the likes of King and Posen, that further quantitative easing may well be on the cards in February, when they'll also be armed with their latest quarterly inflation report. Looking forward to what the US session, another busy day with corporate earnings, pending home sales also due, and for the fixed income markets, 35 billion in the 5-year note to come as well. That concludes though the opening wrap from here, so for the moment, have yourself a great trading day.